Hello, and thank you for joining us for our Benchmark Wealth third quarter market commentary. In recent events, Hurricane Milton struck Florida's west coast late Wednesday, bringing heavy rain, powerful winds, and widespread disruption. Making landfall near Siesta Key, the storm spared Tampa Bay from a direct hit, alleviating fears of catastrophic damage in the densely populated area, which analysts previously estimated could result in $175 billion in losses. However, the broader region remains on edge, still reeling from the aftermath of Hurricane Helene. The financial impact of Hurricane Milton could extend well beyond the immediate damage to infrastructure. For investors, key stocks are likely to feel pressure, particularly in sectors like entertainment, airlines, and insurance. Hurricane Milton's impact could also spill over into inflationary pressures, particularly when it comes to food and energy. In the Middle East, tensions between Israel and Iran have ratcheted up over the last few weeks. Ceasefire talks and de-escalation efforts from outside parties have been unsuccessful so far. The risk of broader regional conflict in the Middle East has risen, with U.S. President Biden suggesting some possibility that Israel targets Iranian oil infrastructure. Broader financial markets have been contained so far, but we expect further market volatility and a spike in oil prices should the conflict escalate further. Overall, equity markets had a strong third quarter, with the Federal Reserve's decision to cut interest rates providing a significant tailwind for stocks. Mega cap and small cap stocks reversed their underperformance from the second quarter, while tech names and growth stocks still performed decently. The Dow and S&P both hit record highs in the third quarter, driven by a robust September rally that marked its best September since 2013 and extended its streak to 5 consecutive months of gains. Meanwhile, inflation appears to be hovering closer to the Fed's target, suggesting a complex balancing act between supporting growth and taming inflationary pressures. The overall sector performance in the third quarter was very strong, as 10 of the 11 S&P 500 sectors advanced, with energy as the only laggard. This is in sharp contrast to the previous quarter, where about half of the S&P sectors declined. Another notable headline this quarter was the Federal Reserve's move to cut interest rates by 50 basis points, lowering the federal funds rate to a range of 4.75% to 5%. Following the larger than usual cut, markets are anticipating additional rate cuts in November and December, which could lead to more aggressive easing if the economic outlook remains uncertain. The U.S. labor market in the third quarter showed mixed signals. The unemployment rate remained relatively stable, hovering around 3.8% in September. However, jobless claims experienced fluctuations, indicating some ongoing uncertainties in labor demand. We have seen solid growth in job gains in sectors such as healthcare and professional services. However, some softness appeared in industries sensitive to interest rates like construction and manufacturing, which have seen a slight increase in layoffs. Recent polling of economists suggests that 3 primary risks lie ahead: the outcome of the November elections and the potential impact of perceived policies, escalation of conflicts in Ukraine and the Middle East, and lastly, the potential for a monetary policy mistake by the Federal Reserve. Looking forward, our base case suggests we stick to soft landing, but anticipate potential choppiness in the markets surrounding the election cycle. Global growth will move below trend but remain positive, supported by ongoing U.S. economic strength and labor market consumer resilience. Inflation will remain above target but continue to proceed closer to 2%. Economic growth should afford policymakers more time to confirm that inflation progress is sustainable. As economic growth continues, policymakers will have more time to confirm that inflation progress will sustain. From all of us at Benchmark, we hope you have a wonderful fall season. If you have questions or you'd like to discuss our market outlook, please feel free to reach out to us to schedule a meeting. We look forward to talking to you soon.